From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Tuesday as we hit a record high on the ASX 200. I'm Juliet Sarli. We are seeing a little bit of a petering out of the strong rally we saw over the last couple of hours as we head into the close. But you can see there the CIBO 200 up 1% and the ASX 200 topping 8,400 points for the first time, hitting a new high. At one point, I think we were as high as 84.44. Looks like we're going to close around 84.04, but of course that is still a fresh record. A lot of momentum coming through across all of the sectors today. In fact, all of them are tracking higher. Let's get into some of the thematics of the day. And of course, that record high is one that we are continuing to watch. We've been seeing US markets hit records since the re-election of President Trump. We haven't really sort of pushed through some of these pivotal levels for a couple of weeks, but we seem to have got there today. And really, it was a lot to do with tech. We've said tech number one because technology one itself was the front runner on the market today after coming through with its full year numbers, also saying it plans to double every 5 years or so. The information tech sector up 3.5% on our market, but really some solid support from industrials, utility, energy stocks as well. Then we had the minutes released from the RBA's November meeting. Now remember, this was held 2 days really before we found out the clear winner of the US presidential election. And the RBA did mention in their minutes that they had some reservations about the outlook, the global economic outlook, the outlook for China, the outlook for US, what policy would mean, and very much just deciding to err on the side of keeping rates where they were at that 4.35% level. Although, of course, as they continually tell us, they're not ruling anything in or out. And they did discuss both the likelihood of a hike and whether or not monetary policy was tight enough at the last meeting, suggesting scenarios that could warrant a rate cut, including a drastic slowdown in inflation. But the board said they'd need to observe more than one good quarterly inflation outcome to be confident that such a decline is sustainable. Let's have a quick look at some of the sectors today, kicking it off with tech, as I mentioned, looking very solid today. WiseTech up by 3%, Xero continuing to rally, up another near 4%. Tech One there up by 11%. Zip and NextDC also looking good. The energy stocks also performing well as we saw crude oil rally in the US session. A bit of a dip out of Strike Energy, but the others all looking solid. When it comes to the banks as well, we saw CBA at one point up more than 2%. All the big four apart from the ANZ tracking higher, and Macquarie up 0.8%, $232.19. A quick deep dive into Tech One because it did surge after posting a 15% increase in full year net profit to $118 million, also booking a 17% jump in revenue to $515.4 million. Santos also in focus. It's going to increase returns to shareholders starting in 2026 after its major new projects in the Timor Sea and Alaska start production. Newmont among the frontrunners in the gold space, which we should mention also rallied as we're continuing to watch the escalation increase between Russia and Ukraine. Newmont has inked a deal to sell its Musselwhite mine in Canada for up to $1.3 billion US. This is part of a divestment plan to sell off multiple mines and boost shareholder returns. We also saw KMD Brands, the owner of Rip Curl and Kathmandu, coming under pressure, flagging that it remains cautious on consumer sentiment. And the Brisbane-based testing company ALS recording a 14% increase in revenue, and that sent its shares up by 6%, $15.53. Let's get to our guest for the COB, Grady Wolf from Bell Direct, joining me now. Grady Wolf, excuse me. Hi, Grady. A record high today.
Yeah, absolutely. It's a really positive day in the markets. And I think everyone's still guessing, when is this correction going to happen? How high can it go? And I think everyone would love to have a crystal ball in this scenario because there are some tailwinds there to say that the fundamentals, we've been through the hardest times of FY24. We've seen the resilience of all of our companies here in Australia that have been able to weather this high interest rate environment and high cost environment And then now we're heading out into the rate cut environment, hopefully, obviously not just yet, but hopefully on the horizon soon. And then obviously we can get into the higher earnings and higher margin appreciation sector again. But I think for now, it's the tailwinds are there across many sectors. Everyone's still diving into the banks for their safe haven nature because of how strict our regulators are in Australia. So everyone kind of sees gold and the banks as kind of one and another in safe haven nature. So that's why the banks are rallying at the moment. And obviously the outlook for all of our big miners in WA is really positive on the back of hopefully some further stimulus out of China. So all of this paints a really good picture and positive picture and keeps boosting our ASX to record levels.
I wanted to touch on what you mentioned about the fact that we are expecting at some point the cuts from the RBA will come, and that is of course one big boon for the retail sector. We've got the Black Friday, Cyber Monday sales coming up this weekend, and I was interested to see that Paul Zara from Australian Retailers Association reckons that $6.7 billion will be spent over those 4 days. Obviously then a positive for a lot of these retailers, but Kathmandu is still flagging these cautious conditions.
Definitely. And I think it's really interesting to note that Black Friday back in the day when it first started, it started on literally 1 day sale. And a lot of companies use this as an opportunity to move a bit of inventory and kind of boost everyone up ahead of Christmas. Now Christmas, no one shops around Christmas anymore. It's all Christmas shopping on Black Friday to save money because we are in this high interest rate environment. And KMD Brands is definitely one of many brands that are coming out saying it's cautious right now. But a lot of companies have jumped on this Black Month bandwagon is what I'm calling it, because all of these sales started weeks ago. My phone was pinging every single day with sales 3 weeks ago saying Black Friday starts now. So I think it's a bit cheeky by the retailers. So for consumers, it's a great thing because you get sales left, right and center. But for the retailers, it's another way of saying we need to move our inventory. And so we're putting this promotion on for a month, but we're going to call it Black Friday to kind of get into the buzzword. So from an investment point of view, the longer the sale, the kind of worse it is, because it means that they're selling their inventory at a lower level. Some of them are often writing it off as well because they literally can't pass it. So high inventory levels in retail is not a great thing. So from an investment point of view, definitely looking at the company and how long their promotional period is a way of gauging their earnings potential in this Black Friday period.
All right, I'm still a sucker for those ads though, Grady. I think I've done a little bit of shopping on my phone. Let's talk about gold. I mean, it really is this continuation of the safe haven play, particularly as we watch very closely what's happening with Russia, Ukraine. Northern Star looking good, Newmont out with an update as well.
Yeah, Newmont was a really interesting one coming out with that update, and obviously Northern Star, as you mentioned. Even Capricorn Metals have come out with an update recently. So all of these companies, I think Capricorn came out with an update of their resource rate, I think it was. So all of this is really boding well for our Australian miners and for gold miners especially. And I know in the past few weeks everyone's been freaking out that gold's coming back. Oh no, but we're back over 2,600 US an ounce, and that's where it belongs at the moment. The tailwinds are certainly there. There's more demand than ever. Central banks are buying it up. We've got geopolitical tensions. We've got not enough supply of high grade gold. There's just so many tailwinds there that really say that despite the US dollar strengthening right now, that's not a fundamental to bring back the gold price. So, weigh on the gold price. So definitely bodes really well for our gold miners. And again, it kind of plays into that safe haven nature that investors want the safety and security of gold in their portfolio.
And Grady, let's talk about the RBA minutes. I mean, we do get so much communication from them now, and Michelle Bullock is very generous in the post-meeting press conference. But what did we learn potentially from these minutes today?
Yeah, it was a really interesting one. Now, obviously markets and everyone wants to hear of rate cuts, and investors are really kind of pushing for that. Where is the rate cut? When is it coming? And a lot of people pushed and pushed and pushed to really keep themselves kind of financially stable to get to the rate cuts, but we just don't know when they're going to come. And so, as Michelle Bullock said today, she's really good, as you said, at giving a lot of insight into what they're thinking. She did say consumer spending, labour productivity and global economy are the three key areas that they're watching that aren't really showing enough certainty in order to bring the rates down, unfortunately. Now, labour productivity is still down per hour and wages are still rising. And obviously consumer spending, as you said, we're about to expect $6 billion pumped into our retailers. So that's not a good thing for inflation. And then obviously the global economy, so China's rebound and the US, whatever Trump brings in next year, Drill, baby, drill is what we're thinking. Those China tariffs, it's a lot to weigh into a consideration for our RBA. So I don't actually think there's one on the horizon until at least next year. They're pushing it out, the expectations till June to August. Even today, it said that they're not expecting the forecast of underlying inflation to return to the mean level, or the sustainable target of 2 to 3% until at least 2026. So I'm crossing my fingers for everyone out there that there is a rate cut before that. But again, we can't really say until the RBA is comfortable, and I don't think they should act early, and it doesn't look like they're going to act early for any reason other than to get Australians under control.
Yeah, indeed. They are very steadfast in trying to bring inflation under control. Grady, thank you so much. Grady Wolf there from Bell Direct. Now, we mentioned Technology One was a standout today, and it was the stock of the day on the call. Andrew was joined by Rudy Philippek from FN Arena. We know he likes this stock, and also Philip Pepe from Shaw & Partners.
Technology One, as they again reiterated today, they expect to double the business in 5 years. Since 2004, they've actually done better. And what is happening is that this company is actually becoming a better company, and the margins and growth is actually accelerating. People are now thinking that what they said today is probably going to be proven conservative in the 5 years ahead.
It's a great company. I mean, Shaw covers the stock. We've currently got a hold on it. There's a result out, so we're obviously reviewing our numbers. But strong result, revenue up 18%, beat our numbers by about 4%. Cash EBITDA or cash earnings 9% ahead of our forecast. Very strong, costs under control. Tick, tick, tick. The problem analysts have with a company like this is whether they look at 56 times PE for the stock versus 3 times for something else. And I've learnt the hard way. You don't necessarily buy the 3 times PE. No. Sometimes you buy the 56 times PE. But it's also expensive versus its own history, and it's expensive versus analyst price targets.
Of course, the final trades have just gone through. We're waiting to see where the ASX 200 settles. It did hit a fresh record today, though, really led by a lot of these moves in tech players. Tech One was up 11%, Block was up 6%. Sonic Healthcare also looked good, as did ALS. We mentioned their trading update, and De Grey Mining up 5.6%. To the downside today on a positive session was Elders, of course, resuming trade after its update, down by almost 9%. Neuron Pharmaceuticals coming under pressure too, as was the lithium miner Pilbara Minerals, and Weebit Nano and Super Retail under pressure as well. In the small end of town, we saw Close the Loop up by 21%. Southern Cross Gold, Omni Bridgeway, Meteoric Resources and Peninsula Energy also there. While to the downside in the small end of town, we saw Tamarwood, Trajan, Titomic, DougTech and Coastal. A quick look at what we are expecting in the overnight session tonight. Another read on the overall US economy with housing starts and building permits for October. And of course, another day, another speech from an FOMC member. This time Schmid will be updating the market on where the Fed is at. Tomorrow locally, nothing really high level. We do have the monthly employee earnings indicator for September and the national accounts for 2023-2024. But we'll be continuing to really watch the moves in the equity market, and let's see where the equity market is tracking as we finish out the day's trade. Look, a little bit of a sell down into the close. Still a very solid performance, up 1% there. On the CBO 200, it is tracking at 1,600 points. That's a nice, neat level. It does look like, though, that despite touching 8,400 and in fact at one point getting to 8,444, the ASX 200 has just closed below that level. So up by 74 points, 0.9%, 8,374 is where we sit on the close of the trade. So we'll of course wait to see if we can breach through and remain above 8,400 points during Wednesday's session. Don't forget as well that tomorrow we have our crypto event. If you haven't registered, you can get online and register for that, ausbiz.co/crypto. Andrew Gagan will be hosting that. That's from 11 a.m. Eastern. It is, of course, free to register and join. A lot of great conversations will be happening there. All right, we'll see you from 9:45 Eastern tomorrow.